Are you dreaming of owning your own home but can't save up enough money for a down payment? Rent to own might seem like a reasonable option for you, but to be honest with you, it could be a financial nightmare waiting to happen. In this video, we're going to go over a few pros and cons that you should be aware of when it comes to a rent to own situation. Now, do me a favor and make sure you stick around to the end, because I'm going to give you a solution that might help you in these scenarios. And although I'm not in favor of rent to own scenarios, let me be the first to say that if it makes sense, it makes sense. But most of the times in rent to own scenarios, it's probably not going to make sense. And when we go over some of these pros and cons, you'll probably understand why. So let's start with some of the pros with a rent to own situation. So the first pro that comes to mind is that this scenario allows for someone to potentially live in a home that at some point they may own, and it may not require for them to put down a significant or a huge down payment, and it may not require for them to have the best credit score. Those are the two reasons that would keep someone from applying for a mortgage. It's either the down payment or the lack thereof, the credit, or a combination of the two. So a rent to own situation, you may not have to worry about either of those moving mechanics. Now, this one I can't say that I'm mad at all, but another pro or another positive thing to consider in a rent to own situation is that it actually gives the renter slash purchaser the opportunity to actually test out the home. Now, you don't get this scenario in any other real estate purchase. You don't get to test out the home to see if you like it, to see if you can fit in the home comfortably, to see if you like living on that street or in that neighborhood. So that's something that I think is really cool and you're not going to get elsewhere. Now, another positive thing, if it's structured correctly, is that a portion of your rent payments should be going towards a down payment to help you purchase that home, or maybe even towards the balance, which when you purchase a home and you take out a mortgage, there's something that's called an amortization schedule. And basically what that schedule says is that every time you make a payment of X, whatever your mortgage payment should be, it shows you where your mortgage balance will end up based on those payments. So the more payments you make, the lower your mortgage balance goes. Now, in this scenario with a rent to own, you don't necessarily have a mortgage. So you have to be creative and figure out, well, where does this additional money go? But it should be going towards a down payment to help you purchase that property. Now, I'm going to put this one on the positive side based on today's real estate market. And that is when you structure a lease to own purchase, you also agree upon a sale price at that time, right? So in this scenario, if you were to agree upon a price today in the beginning of 2023, and the goal was to purchase that home within 2 years of leasing the property. Well, right now, homes are appreciating rapidly. We've seen homes appreciate in double digits in some areas over the last 12 months. So in this scenario, it could benefit you to come to terms today on a sale price that you're not necessarily gonna have to make good on for 2 years down the road. Now, if the market were different and the market were declining, you may want to approach that with a little bit more caution. But right now, in this type of market, I think that would be beneficial. So now that we've gone over the pros, and there really aren't that many, let's go over some of the cons. And the first thing that comes to mind is the inflated rental payment. Now, as I spoke about a moment ago, when you are making those payments, a portion of it comes back to you to help you with your down payment. Now, here's the thing though, when you're making those monthly payments, your rental payment is actually inflated because that extra money isn't necessarily extra money. It's a creative way to force money out of you on a monthly basis that can be set aside for future use, okay? So let's just say in a normal market, the home that you are purchasing would rent for, let's just say $2,500 a month. Now, in a rent to own scenario, that $2,500 a month rent very well may be as much as $2,750, $3,000, or even more. Now that $500 a month difference, let's again, if it was $2,500 and the rent to own situation, it was $3,000, that puts you in a scenario where you're saving $6,000 on a yearly basis, or $12,000 at the end of 2 years. So at the end of the day, having $12,000 towards a purchase is pretty significant. But again, it does require additional sweat equity from you on a monthly basis, which could make living conditions a little bit tighter. Another con is that you may be subject to additional fees in the event you were to default or back out of the contract. Now, when it comes to rent-to-own situations, you may not back out of the contract or be out of the contract because you want to. You may be forced out of the contract and still be subject to losing money and some of these fees that we've seen in rent-to-own scenarios. And because you're living in the house, another thing is that you're going to need to maintain it. In a normal situation, when you're renting a home from a traditional landlord, there's usually a threshold. At least with my tenants, anything under $100, I ask for them to just fix it. Don't call me, just go ahead and take care of it. But if there's a significant repair, roof leak, a broken window, a broken door, any home repair along those lines, it's my responsibility as the landlord to correct those issues. Well, in a rent-to-own scenario, that becomes a little bit of a gray area. Not only does it become a gray area, but in your mind, if you are making payments towards a home that you think you are going to own one day, there's also an emotional attachment that comes with that. So you don't want to see your house with a roof leak. You don't want to see it in need of repair because in the back of your mind, that is your home. So now you are not only financially invested into the property, you are also emotionally invested into the property. And that is exactly what you don't want for a property that you don't own. Now, as I mentioned, you may be forced out of the contract, which brings me to my next con. One late payment could result in owner of the property, and I emphasize the word owner because until you make good on those terms, you don't own the house, right? But one late payment could result in that contract being void. And as I said earlier, as one of the positives or pros, you may not have to put down a lot of money for your down payment, but you're gonna need to put down some money. And remember that extra money that we said that you're going to pay on a monthly basis to go towards your down payment? Well, you may be subject to losing that as well. And in my mind, that's where these opportunities really become predatory and are more so in favor of the property owner and not the renter or person intending to purchase the property. But there's more, right? Another thing to consider, or another con, is that if the owner of the property, the person who you are making the payments to, what if they don't make the mortgage payments? Or if they don't have a mortgage, what if they don't make the tax payments? That property could be subject to foreclosure, whether it be through the mortgage company or whether it be a tax sale. And you don't want to see or be in a situation where you're making those payments on time and technically you're being robbed. That money is going elsewhere. Maybe it's going to pay the mortgage on their primary home, or maybe it's going to pay for their car payment. But what it's not going towards is not going towards the financial obligation, mortgage or taxes, for the property that you have agreed to purchase. So that is a huge one in my opinion, because if that were to happen, you have two options. You either make good on the debt, which is for a home that you don't own, or you risk losing all of your money, time and effort, and again, that emotional attachment with that property. And before I let you go, there's one other thing that comes to mind when it comes to rent-to-own situations. And that last thing is the contracts in which you're going to sign, the contracts in which state the terms of this rent-to-own opportunity. Well, there really isn't a standardized document. There isn't a document like we would use in the state of Pennsylvania when you are buying or selling real estate. Those documents have been approved by legal counsel, but when it comes to rent to own, there really is no standard document, which opens up the floodgates for scams, fraudulent opportunities, and every other opportunity to create a financial burden and headache for you. So in my opinion, I would definitely avoid any rent-to-own situation. But as I mentioned earlier in the video, I want to give you a solution. So the solution is, if you come in contact with someone who has a property that's rent-to-own, ask them if there's an option for them to do seller financing. Now, there's a huge difference there. Seller financing states that you are actually going to be leveraging the owner of that property. They're going to become the mortgage company. And if you do this accordingly, they can actually record a mortgage and they can actually service that loan, like I mentioned, and give you some sort of amortization that says, hey, when you send me this amount, your mortgage balance comes down to this. And that would be the safest way to purchase a home without going to your traditional lender and asking for a mortgage. I wouldn't say that this opportunity is out there in abundance, but neither are rent-to-own properties. So again, if you're in a scenario where you have a rent-to-own opportunity in front of you, just ask that simple question, because it is by far the safer way to go. And if you're thinking about buying a home in the near future, do me a favor, download the buyer guide that's available to you. It's in the description, it's free, and let that be your stepping stone. Let that be your guide, whether it be now or down the road. Let that be your guide to help you become a homeowner. And if you have any questions for me, feel free to schedule a consultation or drop a comment here. And with all of that said, till next time.